review video. It's Tuesday, the 8th of March 2016. I will make this one a short video. We're gonna cover 4 pairs. These are all pairs with patterns on them, so we'll go through them quickly. First pair I want to show you guys is this one I just posted on TradingView. If you haven't subscribed to our TradingView, please do so. You just go to tradingview.com and find Forex viewers. So this is a Gartley at market and a bat just below. So if you guys are trading the Gartley pattern, we just got long right here. If you are trading the bat pattern on this pair, you'll have to wait just a hair. We have a bat pattern completion here below. I'm waiting for the bat to complete. This is a nice structure level right here. And let's make that green. So that's my thoughts on the pound yen. Obviously, if we take a look at a bigger perspective, you can check out the 4-hour. We have the break here, something like this happening. So it would not be a stupid idea to expect the market to drop down in here and continue upwards. Of course, the market has been trending downwards for quite a bit. So is this the reversal right here? Who knows? Who knows? So let's check out the dollar yen. These are all 3 of 4 are yen pairs. So this is getting a little crowded with drawings in here. But if we take a look at the 1-hour, this can be removed. This is a cipher pattern that has completed, so this can be removed. I'm not going to remove it. I'm just going to do it. I'm not going to spend time removing things. But dollar yen, we have a bat pattern on the yen, on the dollar yen here. So we are expecting the market to drop a little bit down here, and then we're going to go long. Yeah, of course, I forgot to. I was going to show the targets and stops for the pound yen. So targets are drawn from A to, if this is the Gartley, from A to D. So it's X to A to B to C, and C to D, right? So we draw our Fibonacci from A to D, or where the market is at. If the market keeps dropping, we'll have to follow with the Fibonacci retracement. But if it's going to turn on this spot right here, we are shooting for 2 targets, the 38 and the 618. Right? Same deal with the bat. Draw the Fibonacci down if the bat will complete and turn on a point. We are shooting for the 38 and the 618. 2 targets. Always the same. Right? So let's go back to, I'm sorry guys, stops. Stops are 1 ATR below the X point. So 43.29. We'll have to go 43 pips under the X point of the Gartley if we're trading that. we'll have to wait and see if the ATR will change for the bat pattern. I'm guessing not a lot. So about 43, 44 pips below the X of the bat pattern, right? Yeah, so that's targets and stops for you. Same thing on the dollar yen, targets from A to D. We will be shooting for 2 targets, 38 and the 618, and we are going to be stops 20 pips below X point, right? Next up is the euro yen, and this is just something I wanted to show you guys. I believe we discussed this in the last video. I discussed my entry, why I was getting short right here. So I'm still short. I did get a target off on this 38 right here. So I took half my contract size off, and now I am waiting for the market to drop into the 618 right here. Now here comes the thing. I'm gonna do a little teaching on hedging. If you don't know what hedging is, it's basically when you buy and sell at the same time. People in Europe can do it. I don't believe people in America can do it. So let's say we want to go short and long right here at the same time, right? So we're going long and we're going short, right? So we're hedging our position. So if the market does something like this, let's say it's gonna continue down, of course this short position will be winning and the losing position will be the bullish one will be losing. So the general thought process is that the market will go as far as being stopped out from the bullish position. So if we have our, so this is our, oops, not the line. This is our, let's say that this is our stop for the bullish position, and this is our stop for the bearish one. So generally in the same vicinity of each other. It's not accurate, but so the general idea is that the market will stretch as far as stopping out the bullish one, but continuing in profit for the bearish one, right? So we're going to be winners no matter what, right? We're not gonna be as, it's not gonna be as big as a win if we would just short right here and don't do the bullish one, so we don't hedge. Obviously the win will be bigger because this whole thing right here is in loss because of the bullish position, right? This is hedging in a nutshell. Of course I could explain this better, but I'm not going to. But in a nutshell, this is what hedging is, right? Some people can do it, some can't, right? But for people that are interested in hedging, you can also hedge between pairs. And this is what I talk about, correlation. So the euro yen, and let's take, for example, the pound yen, right? So if we are going to get long on the pound yen right now, right? The pound yen and the euro yen generally move in a similar direction, right? So if the euro is dropping, we can take example. Let's take from all the way right here, right? So the euro is dropping, found this point of exhaustion and drop euro yen all the way until down here, right? I can go to pound yen and see the exact same thing, right? So the pound yen and the euro yen, for example, are generally moving at the same, in the same direction, right? We can take the upwards move right here. Euro yen, the upwards move right here. Can you see it? It goes up, then it goes down. Pound yen goes up, then it goes down. We even got up, down, right? On the pound. And if we take the euro, we have up, down, down. Oh, no, that was, and obviously the dollar yen as well. But let's take the euro yen. We've got the up, down, right? Do you see what where I'm going with this? So if we were to go long on the pound yen, we were essentially hatching ourselves out from this position I have already going on the euro yen, right? So that basically means I will be, if I go long on the pound, I am securing myself. So at least I will always be a break even. This will always be at least a break even trade, because if my profit on the euro yen, of course, will minimize as the market goes up. The profit on the pound yen will essentially zero that out, right? So that's basically hatching inside different pairs. So for you guys that can't hatch on the same pair at the same time, like for example people in the United States, this is also a opportunity if you're interested in hedging. I'm not a great fan of hedging, but it is a way for you to secure your profits with more, or it is a way for you to secure your profits. The risk in hedging is, of course, if the market, let's say, take the same example as before, if the market goes down, it hits our stops right here, our bullish stops, goes down, hits our stops, and then turns on a dime and goes straight up. Then we will be stopped out of the bullish position, leaving this neutralized, and we will eventually be stopped out from our bearish position, which is this one. And so we'll get stopped out and then stopped out. That's the reason I don't really like these types of hedging moves, right? It's gonna sting even more if you get stopped out right here just by a few pips, and then the market shoots up and stops you out again, and then to rub it in, goes down once more, right? So that's the whole hedging thing. But we have secured the profits on the pair right here. We have the second contract running. It's not a stupid move to consider going long, because we of course we have a reason to go long on the pound yen, and then we are just securing our profits. or at least getting it to break even, right? The last thing I want to show you guys was on the New Zealand dollar, US dollar, we have a Gartley pattern setting up right here. This is a nice pattern to go long at, just because if you can see how the market has been acting, has just been in a upwards position. So this is a chance for us to, and as you can see, this area right here, which has been respected time 1, 2, 3, 4, 5, a little falls right here, 6, it breaks through, and as we know, when our resistance is broken, we immediately consider it to become a support. So with this pattern right here, we are going right into previous structure or our previous resistance level and hoping that this will bounce off that. Right, so that's all for this video. I'll see you in the next one.